going to talk about Florida tax sales, like we mentioned. We're going to go through how Florida works. We're even going to get a little bit into the history and how Florida sells both tax liens and tax deeds. Really, when I was looking at it, they have been doing this shade, selling tax liens and tax deeds since about the 1930s. In fact, we even have some tax lien certificates from like 1936 and 37 that we have framed in our office, that have different old Florida tax liens and tax deeds. And so it's kind of interesting to understand this isn't something new. This has been something that's really been going on for almost 200 years in one form or another.
Yeah, I think they've always, at least for the last 25, 30 years, they've certainly had the best system. And I think that even throughout the 80s and 90s, they had a really good system in place here compared to most states. And it was confusing for a long time. I would say for a long time, Florida was one of the more confusing states to try to figure out. And that was because they seemed to offer liens and they offered deeds, and it didn't really make sense as to what they were. But today, they're what we would call a tax deed application state. And what that means is there's states that offer tax liens and tax deeds. There's only a couple of them now. Colorado is another one that is now a state, a tax deed application state. But Florida has always led the country when it came to their both online records and with their online tax sales. They were the ones doing tax sales earliest online, and they were the first ones that really had the good comprehensive online records as well. And of course, the real estate market there is also very strong.
Yeah, exactly. I mean, for whatever reason, Florida real estate still looks strong in a lot of different areas. But to get into history a little bit, as I mentioned, they started offering tax liens almost 100 years ago. It started in the mid 1930s. They were doing, tax lien certificates, and they had problems with, widespread delinquency. And so they passed a couple of laws to kind of figure it out. And then by 1934, they amended their original constitution to include tax deeds. So, they had a bunch of tax liens that weren't getting purchased because they didn't have investors that were going there to the auction. So the county had all of these tax liens and they didn't know what to do with them because there just wasn't the amount of investors going to the auction. And that's where they figured out, well, let's go ahead and create a tax deed application so we don't have 7 or 10 years worth of back tax liens that are just sitting with nobody ever doing anything with this property.
Yeah, I mean, essentially what they needed was the power to foreclose on the properties. Just certain lien states that the county doesn't necessarily have the power to foreclose. Like in most of your Arizona stuff, the county never really foreclosed on that stuff until now. Now they do eventually here with a lot of the liens, like with some of the sales that we see where they do offer up deeds. But for a lot of counties, though, it's a major problem. So yeah, that gave them the power to foreclose on properties, and that is kind of where they fix a lot of those problems here with their auction. So the way that it works is, first off, every May, Florida holds their tax lien auction. And their tax lien auction, they offer up every county offers up liens. Those liens come with a 2-year redemption period, and they pay out a maximum rate of return of 18%. And they usually all sell them by by interest rate. So bidders basically bid down the interest rate to win the sales. However, as those liens are sold, most of the liens are going to redeem. And when that happens, nothing really needs to happen. Essentially, the county is just able to cut a check to the investor for what they paid plus the interest rate that they're owed. However, if that redemption period expires in Florida, then what happens is the lien holder can fill out a tax deed application, and that tax deed application prompts a judicial foreclosure on the property. So as soon as that application is filled out, the county will execute a foreclosure on the property. So basically notifications will go out and the property will be foreclosed on, and it'll be offered up at a tax deed auction from there, starting amount with what's total owed in taxes and fees. So essentially, as soon as that property gets the opening bid amount in the deed auction, that's set up to pay off the lien holder for everything they're owed, plus any interest that they're owed as well. But essentially, though, that's how they essentially pay off lien holders, is by selling the properties as deeds at auction. It kind of guarantees that the lien is going to redeem in every case. So it means that for lien holders, you're never really going to get the property in Florida, but you're also always going to at least get your money back plus your interest rate return.
Yeah, yeah, definitely. So it's a little bit different system than a lot of states, but I think it's an effective system. In fact, I heard a lot of investors complaining when Colorado just recently changed their law to do a system similar to this. And from me and Shade's standpoint, that just gives us more opportunity to be able to acquire the property. Uh, I think we still have some more slides to go through, Shade.
Oh, do you pass it
Yeah.
back to me then? Sorry.
Okay.
I thought we were jumping over here. All right, here
No.
we go. Let me set my screen up here. Oh,
Yeah,
there we
we're
go.
going to go through and talk about more detail on the tax lien process and then the tax deed process. And then what we'll do is we'll go ahead and jump over and look at some live examples. So one thing to remember about Florida tax liens is the auctions are going to be held in the month of May. Sometimes they'll go into the first part of June, but that's kind of when all of the counties are going to be holding their auctions. So we know each May, that's when the auctions are going to take place. Now, Shade kind of mentioned this, but they use a bid down the interest rate method to be able to sell the tax lien, meaning that they're going to start at 18%. Whoever is willing to accept the lowest bid will go ahead and be the tax lien certificate winner. Now, they do start at an 18% interest rate, which ends up being about 1.5% per month. Some people are under the assumption that that 18% is going to be applied or paid regardless of when they redeem. No, you're going to be earning 1.5% per month. So if it was 6 months, you would earn 9% return on that.
Yeah, and yeah, the increments are always down by 0.25% rates. Now, as we were saying, all Florida tax liens are sold with a 2-year redemption period. Following that 2-year redemption period, the lien holder can fill out a tax deed application, which that is what initiates this foreclosure process. When they fill that out, the county will execute a foreclosure. They schedule a tax deed auction where the property can be sold to investors there in the public. But as soon as that minimum bid is met, then the lien itself and the liens are paid off. Anything above that lien amount, though, anything above the opening bid amount is the surplus. And that essentially is supposed to go to pay off other liens, and then anything that's left over from there is supposed to go back to the original owner.
Yeah, exactly. So they have a 2-year redemption period. Anytime after that 2 years, the lien holder can go ahead and start the foreclosure process. Now, they're going to have up to a total of 7 years before that lien will no longer be valid. Now, one thing to talk about, and this is one thing that investors have loved about Florida, is they have what's called a 5% penalty. And what this means is that regardless of how low you bid that down, when if it redeems within the first year, you're going to be guaranteed at least a 5% penalty interest. So if it redeemed the next month, you're not going to only earn 1.5%, you're actually going to earn 5% or 6.5%, including that 1.5%. And so this is part of the reason why Florida is so attractive, is because of this. And really the biggest risk with Florida is tax lien roll up.
That 5% minimum is really what attracted a lot of the big financial investors that came out there. They would buy, it's been hundreds of millions of dollars in these lien auctions to buy up liens because they know that a certain percentage of the liens are going to redeem quickly. They're going to earn, that minimum 5% on it. And they're eventually, if they keep buying the liens, they'll be able to buy liens there at basically get the first option to buy liens where they'll make the full 18% on it, which is even better for them. And so, yeah, it's attracted a lot of investors, and the roll-up is an issue. Although what you're going to find as we look at different liens today is that the vast majority of tax liens are really good investments. It's actually hard to find a bad tax lien when you're dealing with the wholesale.
Yeah. Now, as far as the tax lien auctions, most of the counties in Florida have moved over to online auctions. In fact, as I was going through it today, I don't know if there might be a couple of counties, we'll have to go through and look completely, that aren't still doing on-site auctions, but most of them are either using Real Auction, Lien Hub, or tax certificate sale, kind of abbreviated as you can see there, to be able to sell their tax lien certificates.
Yeah, in fact, yeah, they're pretty much all are online. All of their deed auctions. So once the tax sale has been sold, tax lien has been sold, and that 2-year redemption period has passed. So the investor basically has to wait out the 2 years, but you can't wait any more than 7. So there's a 5-year period of time there, where some investors, if they don't take action, the past due taxes can just sit there and accrue, and you can get year after year after year of taxes that are owed. That's kind of where the roll-up issue lies. If an investor simply pursues foreclosure after 2 years, there is a very limited amount of roll-up. I mean, really what it means is if after 2 years there can only be a couple of liens that have been issued against the property, so it limits how much the investor would need to pay in order to foreclose. But once that has expired, the tax deed application is what they're going to fill out. And it's actually at the time they fill out that tax deed application that the county would make them pay any other taxes that are owed in order to foreclose. So that's where the investor, if they've only purchased one lien at that time, they'll probably invest additional money into the property, to pay off the foreclosure cost of the property, which is basically paying off all the liens that would exist against the property to send it to the deed sale.
Yeah, exactly. Let's say that we bought a 2023 lien, and that was a first year lien, and and now we went to go foreclose. It's been 3 years. We would have to pay off the 2025 and the 2026 lien. And essentially, once we foreclose on those, that time between when you filled out the tax deed application and paid those additional liens until when it goes to the actual foreclosure sale, you're going to be earning 18% off of that amount. So let's say you bought $1,000 lien, you went to go foreclose, and there was 3 other liens on the property that were each $1,000, so you paid an additional $3,000. You would be earning 18%. Now that may only be for 2 or 3 months, 4 months, 5 months. Sometimes it can take between 2 to 6 months, maybe at the longest, for a county to go through the entire foreclosure process. But during that time, you're going to be earning 18% off of that additional liens that you purchased.
Yeah, which is really it's another way you can basically earn the maximum rate of return in the state. There is when you're going through foreclosure. So essentially, once that has happened for the tax deed auction, the county's going to advertise that. Although most of them are set up now with their own online auctions, and yeah, the opening bid is going to include everything that's owed in taxes and fees. The one exception to that is if you have a homestead property. Homestead properties, which those are properties that have the homestead exemption for taxes. So they basically, the homestead exemption reduces their taxes, but they can only qualify for it if they're living in, if it's an owner occupied property and it's their only residence, then they can qualify there for that homestead exemption. But when that happens, though, they automatically increase the minimum bid amount to half of what the estimated value of the property is, or half of the assessed value of the property. So if you're ever looking at the list and it seems like there is a property that has a very high opening bid, like it's half of what the assessed value is, chances are it's a homestead property, and that's why the opening bid amount is higher.
Yeah, and there's really not too many. I would say maybe 10% of the structured properties, maybe a little more than that. It doesn't happen as much, and there can still be value in purchasing that homestead property because it could be well above the actual market value. Now, one thing to remember about Florida as well is that they want their payment pretty quick. So usually they're going to want it by the next day, which means that you're going to need to wire them the money that day or the next morning to get them the funds in time. So that's something to think about as well, that they're going to want that money pretty quickly. Now, Florida has moved over to online auctions as well. There's still a handful of counties. In fact, we really have to work hard when we do buying tours out there to find the counties that are having the auctions, because most of them have moved over to online. A lot of them are using Real Auction. There's a few that are using Grant Street, but most of these auctions are online now, which is great for us because many of us don't live in Florida, and it gives us the opportunity to purchase property in those markets and participate in both tax lien and tax deed sales.
Yeah, nearly all of the tax deed auctions in Florida are online auctions. Like Steve was saying, there's only 1 or 2 counties that still hold on-site auctions. They're pretty much all online, which works really well for all of us that live out of state.